Welcome to this NCUA Consumer Report on understanding the basics of obtaining a home mortgage. This report is part of a series dedicated to informing you about important consumer financial protection matters. Securing the financing for the purchase of a home is one of the most important financial decisions you will ever make. In this video, we will take you through the basics of obtaining a home mortgage loan so you can make informed decisions as you search for your dream home and the right lender. It's important to note that buying a home and obtaining a home mortgage involves complex financial decisions. We will cover only the basics here to help get you started. The home mortgage loan process can be described as having 4 basic stages: research, application, underwriting, and closing. Research. If you are interested in buying a home, determine what loan amount is affordable for you, given your other priorities and financial responsibilities. You'll need to take a hard look at your income, expenses, and savings priorities, as well as the costs of home ownership. Look at costs such as maintenance and repairs, home owner's insurance, and property taxes to see what fits comfortably within your budget. There are ways to help you determine how much you can afford to pay each month to own a home. HUD and HUD-approved housing counselors provide information to help you determine this amount. It's not just how much you qualify for, it's how much you can afford. Finding the right lender with the loan product that best fits your needs is the next step towards securing a home mortgage loan. Be sure to shop around for the lender that offers the rates and terms best suited to your financial situation. This could save you money in the long term. You may want to consult with your local credit union about what home mortgage loan options they have available for members. If you are not a credit union member and you are interested in learning about how to become one, visit mycreditunion.gov. Once you've selected a lender you would like to work with, you may consider requesting a pre-approval letter. This is a letter from the lender that says it is generally willing to lend to you up to a predetermined purchase price and based on certain assumptions. Keep in mind, lenders will check your credit when issuing a pre-approval letter. Application. After conducting a search and deciding on the home that is best for you, the second step typically involves completing a home mortgage loan application. This application will gather information including your name, income, government-issued identification number, the address of the home you plan to purchase, an estimate of the home's value, and the loan amount you want to borrow. Your signed application gives your lender permission to obtain your credit report, so it can begin assessing your credit worthiness. Generally, financial institutions use your credit report to make an initial determination about the amount of financing and types of loans for which you may qualify. It is important to note that federal consumer financial protection laws apply to credit unions. These laws include the Equal Credit Opportunity Act, which requires credit decisions to be made without regard to sex, marital status, race, national origin, religion, age, or any other prohibited basis. Additionally, the Fair Housing Act makes many discrimination practices in home financing illegal. Once your lender reviews your completed application, the lender will either deny your application or continue to evaluate your application and credit worthiness. If your application is ultimately denied, your lender is required to send you a document called an adverse action notice, explaining the reasons why the lender denied your loan. If your lender decides to continue with your application, it is required to provide you with a document called a loan estimate within 3 business days of receiving your application. Your loan estimate will provide basic loan application information and specific loan terms, including the following estimated information: your total monthly payment, other fees including closing costs, and the amount of cash needed to close the loan. After you have received your loan estimate, you should carefully review the document to make sure the information is correct and matches your expectations. This includes checking basic items including the spelling of your name, and more complex items such as whether your interest rate is locked and is fixed or adjustable. If you have any questions about information contained in the loan estimate, speak to your lender or a HUD-approved housing counselor. The lender is required to provide you with 10 business days to accept the loan estimate. You can use the loan estimate to compare loan terms and products from other lenders, withdraw your application, or declare your intent to proceed with the loan. The lender cannot assume that your silence means you intend to proceed. If you decide to move forward more than 10 business days after receiving a loan estimate, the lender can revise the terms and estimated costs and provide you with the revised loan estimate. The lender is also required to give you a revised loan estimate if important information changes. Common reasons why your loan estimate might change include if you change the amount of your down payment, if your credit situation has changed, or if your lender could not document your overtime, bonus, or other income. Underwriting. At this point, you will be required to provide additional financial documentation to your lender. The lender will then undertake a more rigorous evaluation of your application, called the underwriting process. This is to determine whether the institution will support the specific terms of the requested loan product, your ability to repay the loan, and if it will be approved. Your lender will be in touch with you if any additional documentation is needed. During the underwriting process, there are additional steps that might need to occur before your loan is approved, depending on your specific loan application. These may include obtaining an appraisal of the market value of the property, requiring home ownership counseling by a HUD-approved housing counseling agency, obtaining an inspection of the interior of the property, or providing copies of financial documents such as tax returns, paycheck stubs, and employment references. While your home mortgage application is under review, you should continue to save funds for closing costs, maintain your current financial position by making good credit decisions, and think carefully about making any decision that could adversely impact your finances or credit report. Closing. Once you've made it through the underwriting process and your loan application has been approved, you've reached the final stage of the home buying process. This is the closing stage. If you choose to proceed with the loan, it is time to shop for mortgage closing services, which may include services such as pest inspection, title insurance, and a settlement or closing agent. Your closing costs may also include reserves for property taxes, homeowners insurance, title transfer taxes, and private mortgage insurance premiums. During this stage, the role of a closing agent is to gather and finalize all the legal and financial documents and handle the money involved in your purchase. In some states, a settlement agent or escrow agent does your closing. In other states, an attorney may be required. Your lender may also give you a list of companies or agents that provide closing services. At closing, you will receive and be asked to sign several important disclosures, including the closing disclosure, the promissory note, the initial escrow statement, and the mortgage or security instrument. The closing disclosure, which contains the actual terms and costs of the transaction and the details of who pays and who receives money at closing. This notice must be given to you at least 3 business days before closing. The promissory note, which describes what you are agreeing to. It will include details such as the amount you owe, the interest rate of the home mortgage, the length of time for repayment, and the dates when the payments are to be made. The initial escrow statement lists the estimated taxes, insurance premiums, and other charges the lender anticipates paying from your escrow account during the first year of your loan. The mortgage or security instrument explains your rights and responsibilities as a borrower. This instrument also grants the lender the right to foreclose on your home in the event you failed to make payments. You may also receive additional state and local government documents, as well as documents added by your lender. You should review all documents carefully and point out any incorrect information, concerns, or questions you have to the closing agent. Remember, receiving these documents does not mean you are obligated to accept the loan. You have a right to understand 100% of what you are signing. Ask questions until you feel comfortable with everything. Walking away at closing may be better than signing a deal you're not comfortable with. Once all the documents have been signed and your closing agent hands over the loan proceeds check to the seller's agent or verifies that funds have been wired, you now own a home. Thank you for taking the time to learn more about how to obtain a home mortgage loan. We hope this information is helpful in your pursuit to becoming a homeowner. The National Credit Union Administration provides additional resources for potential home buyers that are available at mycreditunion.gov. These resources include additional information about home ownership and home mortgages, credit reports and credit scores, and owning versus renting. The Bureau of Consumer Financial Protection also offers helpful resources for home mortgage borrowers. For more information and videos like this one, visit mycreditunion.gov.